Hello and welcome. In this video I want to teach you a simple strategy that I have learned from stock traders with a lot of experience and that I have backtested in the crypto market. Not only have I backtested it, but I've also tested it and it seems to be a profitable strategy that I want to share with you. And I'd like to get your opinion too on this strategy. What do you think? Have you personally tried this strategy? Of course, at the end of this video, if you could please leave a comment, I'd very much appreciate it. And of course, like the video if you enjoyed it. But in this video, I want to focus on two specific fuel tokens because it seems to work much better with fuel tokens than with actual coins that have a larger market cap. Maybe because the fuel tokens are more volatile and there are wider swings when they do actually get bought or get sold. So again, it is a risky strategy in terms of protecting yourself with a stop limit because you do not have a wider stop limit, but it can also give good gains when you are right? So you have to be right more often than not, because if you're right more often than not, then of course the gains are bigger, because you obviously get that profit, right? So let's take a look at Ontology Gas, and that is ONG USDT on Binance. And again, I am going to focus on Binance because on Binance there are more liquid assets here. There's more volume. A lot of these assets are on multiple exchanges, whereas on exchanges like KuCoin there isn't that much liquidity. So this strategy doesn't really work well on KuCoin, so I would avoid using that for this strategy. Focus more on the bigger exchanges like Binance, Coinbase, Kraken, maybe Gemini, rather big exchanges. But okay, so in this example here we've got the basic moving averages, okay, and here we've got the purple line, which is the 7-day moving average, and it does tell you here, if you scroll over, you can see MA7. We've got the red line, which is the 25-day moving average, and we've got the blue line, which is the 99-day moving average. Now, how does this MA crossover strategy work? So it's quite simple, right? It's when one of the MAs, especially the lower time frame MA, crosses over the larger time frame MA. So in this case, the 7-day crosses over the 25-day. As you can see here, the price is starting to pick up, but of course the line always moves after the price. So first the price is going to move, then the line. But if you notice here, every time the 7-day MA crosses across or over the 25-day MA, we can see here that the price is picking up heavily, right? So here we can see the curve. The price has picked up, then there's a small dip here at 1917, and then it continues going higher to 1939, 1940 area, right? And then here it goes back down, but then here we see another swing upwards, right? So here there's another opportunity for getting in on the dip, for example, around this area, because as you see the curve here, you're expecting that the MA crossover is going to happen again, and then you'll be looking at selling around this area or even around this area, because based on this curve and the formation that it has, it looks likely that it's going to go even higher. Even though you're seeing some dips here, you shouldn't panic. Now you may be asking, where should the stop limit be if you get in here? Well, let's say you get in here, the stop limit should be maybe around this area here, right? So maybe around 18.90 to give you some room. And what you should focus on is try to get at least a 2-to-1 ratio on your money here, right? So if the stop limit is says 18.90, let's say you're like say 0.20 cents down or 0.2 cents down, then you should always focus on getting 0.4 cents on profit, right? Because that is the 2-to-1 there. And again, the other strategy that you could do here if you want to ride this even higher is you could increase your stop limit to break even as soon as you have the 2-to-1, or sorry, as soon as you have the 1-to-1. 1-to-1 means that it's the same as the difference between your stop and your entry is the same between the profit and your entry, right? So that's what it means. So you could do that too, but then you will get stopped out more often than not. Again, in the case of fuel tokens, it doesn't really seem to happen, so you are quite safe, but it can happen more often than not. So sometimes it's better to just leave your stop limit where it is, ride it, wait for the 2-to-1, get out, and that's it. Even if it goes higher, you don't care because you've already made a profit. Another example is here, you're seeing this go down, and then you're seeing this try to go back up. But the risk here, and I've actually tried to play this before and it wasn't profitable, even though you're seeing the lower time frame moving average try to go back up, the red one, which is the second largest one, okay, the 25-day is going down, right? So because that's breaking down below the 99-day, it is a bearish sign. So of course, as you see here, the price is going down. So again, when is the next opportunity? Here, because we've already got the curve going here. Now, could the red one, the 25-day go down further? Yes, it could, but it's less likely that it could happen, right? The probability is higher that it's going to go, that the purple one is going to go above it and is going to cause a small price spike. So again, we're not talking about massive gains here, but still pretty good, right? So imagine you're getting in here because you're seeing the crossover is about to happen. You do need to watch this chart, though, that's the thing, right? So you need to set some kind of alert, some kind of you need alerts, right? Because you need to know more or less when this is going to go under the 99-day moving average, when this price is going to go below, so that you can prepare your next entry. And let's say you get in at 1902, 1903, you get filled. You're looking to get out around here, 1925 to 1930, and that's it, right? Again, you do have the stop limit, so in case it goes down further lower, you are protected, right? I mean, you're going to lose a little bit, but not that much. Again, we have another example here of the price crossing across and going higher, right? We're seeing the 7-day go below, the price dips a bit, and then it goes up above, the price pops a bit, not that much, but it happens, right? The important thing is not to be greedy with this, right? If you're greedy, then it never works out. And one of the other strategies that works really, really well is when you have massive dips, right? So for example, here we can see there's a huge dip, a huge wick down, a bigger dip here, right? Here you may think, well, this might actually pop back up, but no, when you see the red line dump just like that after a massive dip, it's better to wait it out here. This is, unless you catch this falling knife here. If you catch this falling knife, that's great, you can sell here around this area and you're still making a profit. But if you don't catch the falling knife, don't be fooled by this here. Do not enter in this area, because I've seen this many times. Wait it out. And then as you see here, the MA crossover after his last dip, the MA crossover is again taking the curve. So here is a good entry, right? Because this is just before the 7-day crosses with the 25-day, and here we can see there's a pop. Now if you wait this out a bit longer, you can even get a wider move here, because we're getting the 7-day cross over the 25 and over the 99, right? So 2 crosses here. This is very important, because when this happens, and we've seen this happen on the 13th of March with Bitcoin and with other altcoins too, after the 13th of March, where on the 13th of March, sorry, we had the massive dip, and then sometime for like almost 1 month on the larger time frame, we had this. And then when it got to the crossover, of course, Bitcoin popped, altcoins popped, right? We have seen this happen. This kind of strategy almost never fails, right? This kind of strategy is very profitable and seems to happen all the time. I very rarely saw an example, and I don't think I've noted it. I've seen, I think, only one example where this didn't work out and it went a little bit lower. But again, that's why you have the stop limit. More often than not, you will be right with this strategy and you'll win. Again, we're seeing another example here. The price dips, the curve happens. You get in here, you have the stop loss maybe around this area below the 1761 where the last dip happened. And you're riding this, you're taking out the profit, and that's it, right? Now let's look at T-Fuel, and to show you that it works there too. Let me go to T-Fuel USDT. And again, this should work on the BTC pair as well, on the Bitcoin pair, but I prefer the USDT pair because you can see the dollar value here. And you don't have to suffer the volatility. So here, this is the 5-minute chart. Again, you can see an example here. The price went below the moving average, the 99-day, which is the largest time frame. And as soon as the curve happens, boom. Now this is very choppy. You can see here it's very choppy. There's not much volume here, only 396,000 USDT in the last 24 hours. So it is a longer wait. A lot of the times the price is staying the same for like half an hour or 1 hour or longer. Then again, as you can see here, it dipped. Here it popped, right? So there are opportunities. And again, with these fuel tokens, as you can see, the prices, you know, they pop really hard. You can see this huge green candle here. This is a wide range bar that just broken the other MA, the larger time frame MA, which is the 99-day one. So it just shows you these things happen all the time. But then again, it went down straight away. So of course you need to get out ASAP as soon as it breaks this larger time frame MA. Close enough to the line maybe. Don't be greedy. This is the important thing to keep in mind here, not to be greedy. Be careful with your stop limits, and this should work out. So yeah, this is pretty much what I wanted to share with you. Let me know in the comments below what you think about this strategy. Have you personally used it? Has it been profitable for you? Let me know. And if you're new here, please don't forget to subscribe. I would very much appreciate it. Thank you very much, and I'll see you in my next video. Bye-bye.